Ahoy there, traders. How are we all doing? Hello, hello, hello. Hello, one. Hello, all. Just making sure we're recording. Yes, we are. Fabulous. Pop a comment in the chat box. Can you all hear me? If you can't hear me, pop a comment in the chat box. Oh, it's silly, but it amuses me. Hey, Rob. Nice to see you. Been a long time. Lots of changes since we last spoke, Rob. Give me a call if you've got 10 minutes and you want to catch up. Of course. Hello, Kevin. Hello, hello. Perfect. You should still have all access as well to all the updates and the developments. Anyway, we'll save that for a private conversation. Hello, Alan. Hello, Dawn, Emily, Ian. Hello, Ian. Jason, Kevin, Michael, Peter, Robin, you. Ezekiel, where are you, mates? On the recording, where are you? Awesome, Peter. Thank you for your kind words. Glad you're enjoying the YouTube videos. I enjoy them just as much, doing them just as much as you enjoy watching them, hopefully. I usually say, and it's not just one of those fancy lines, Peter, like I generally enjoy helping traders, like at the very least, like with these free sessions, to point you in the right direction. I don't know if what I do is right for you or anyone, but only you know that. But at the very least, I'll always try and point you off in the right direction. These sessions go greater if you're interactive. I will take questions at any time. Let me rephrase. I'll take trading related questions at any time. I remember one time I asked that when I was doing a presentation on the stage, and I said, is there any questions? And it was, what's the boiling point of Fahrenheit was the the question that came back, which is exactly the sort of thing that I would have said if I was asked. Just a random question. Anyway, we're not here for my quite clearly crazy Friday afternoon. I've had far too much coffee. The conversation's just going wherever it's going. So production line trading. You've heard me say this phrase a lot over the years. It's what I want for me first. It's not a fancy marketing gimmick, because yes, I've got an education business as well as trading. I'm a trader first and educator second. I do enjoy it. I am the type of person that stops tourists to see if they want directions. Well, maybe not at the moment, but you get what I'm saying. But like, I want it for me first. So we're going to again look at part of the process. At the very least, what I'd like you to take away from today is a framework to think about trading. Don't focus too much on the widgets and the whiz bangs and the what's the setting and what's the right time frame. It's not that important. And that's the, close to 30 years later now. Been doing this a while. Hand-drawn charts in the mid-90s, but I've been doing it a while. But that's the one thing that keeps coming back to me. There's no fancy tool. There's no indicator. There is no secrets that's not already out there. The biggest contributor to your success at trading, I'm emphasizing your success. Like, I know what I'm doing. I've got my success, but you need to find yours. And a big part of that is, what are you trying to do with trading? And if money's the answer, then you've not figured it out yet. Because money is a byproduct of process, just like with any business. If you're good at what you do and people want to hire you or buy your products and it's good products, you'll make money, just like any other business. And trading is no different. So you need a process to follow, a framework, a system, a methodology, an algorithm. Give it whatever fucking name you want. But just like anything, you need a plan. And that's what we're going to explore today, a framework, a model to think about trading. But before you get there, you need to know that destination. Like, what am I trying to do? What am I looking for? Where is X on the map for you when it comes to trading? Are you an investor? Do you want to do something like Warren Buffett? Are you a trader like me? I want to get paid at the end of the month. I sometimes day trade. I've just spent 8 months doing it live in front of an audience, mainly to see if I could still do it, which I can. But Like there are certain objectives. Like, what do you want from trading? I don't want to be sat in front of the computer all day, every day, flicking through chart after chart after chart. Right. That's going to dictate the way that I approach trading. So that's what I mean by that. So that's kind of like what we're going to be thinking about. Anyway, I'm getting ahead of myself. If you're brand new to these sessions, hello. Usual format is we spend a little bit of time looking at the markets, look at the charts, review any stocks. We're going to start re-including the portfolio review. Now we're going to be focusing more back on the swing trading. We're going to be looking at production line trading, as I've just been illustrating. If you are new, just know I'm not a Wall Street guru. I'm not a guy who's working in the city. I'm not a financial advisor. I'm not an investment advisor. I'm just someone who's figured it out. I learned the hard way. I figured out a few buttons to push, and I get to goof around and do these sessions with you. So thank you for turning up. It really makes my day a lot better with these sessions. But I am just a regular guy. I like cake. I like coffee. I like messing around. I've got a batshit crazy weird sense of humor. I swear like a sailor in port. It's who I am. I'm not going to apologize for it. And if you don't like it, the virtual door's over there, but as you're all here, then welcome, thank you for spending some time with me again this week. The quick biographical history is I've been trading full-time since 2001, hand-drawing charts since the early 90s. I've managed millions under management. I spent 12 years as a Forex trader. It sounds like a really bad movie. I moved on to other things. As a trader, we're looking for opportunity, and I'm market agnostic. If it turns out that beanie bears on eBay are the best use of my time and resources, then that's what I'll be flipping on eBay. If that's the best opportunity for me, then that's what I'm going to do. I currently specialize in stock options, occasional futures, and have done for the last, it's a scary number now, but for the last 11 years. Mentored and coached thousands of great people like you. The one thing that is consistent and universal through all of the decades is being able to get you to replicate what I do. Not a carbon copy, because you can add your own ingredients to it. But the big issue that I help people with is getting you to see your results, as I mentioned earlier. I have, spoken to many people who have tried other people's programs, which is fine. It's not that they don't work. It's just that the person who is the great trader, the guru, for want of a better description, they're not able to teach it in a way that's replicatable. And that's what I aim to demonstrate to you today. And this is why I keep referring to what I do as a production line, because it should be that with minimal knowledge, you should be able to plug into the most basic version of what I do and see similar results. You should be able to find similar trading opportunities, similar stocks. And some of the stocks that we've been talking about, we're going to explore this in a bit more detail, but our model trade, and we've got a live one on Twitter right now, is Twitter. This is the one that we've been talking about for quite literally several months now to help you find the perfect swing trade. And we're going to explore it again and again and again and again, because what you'll realize is that I'm not doing anything new every time. I'm doing the same thing every time. This is what makes it a production line. I'm looking to canon clone what I believe is the best opportunity. We're going to go through one pattern. That's all we do this week. I've got 9 different patterns that we look for to find swing trades, momentum stocks, breakout stocks, range reversals. We've got lots of different types of setups. And if you just do nothing else, just look for these opportunities. Stocks that we talked about recently are American Airlines. Again, we've got another live one. I'll show you exactly how we find these stocks in just a moment. AEO is doing reasonably well, American Eagle. We've also got Key. Now, this is one that's not going so well. It's not giving me much of a headache, but nonetheless, it's not really showing me much love either. But nonetheless, they don't always work out. And this is one that's, for the moment, just meandering sideways. FCX is new for me yesterday. And again, they all follow this model of Twitter. And again, this is the model that we're going to look for. We could be talking about any stock. The name on the chart doesn't really matter. It's the footprint, the model, the production line that we're going to look for. So that's what we're going to do right now. We're going to explore what I lovingly refer to as the production line. So without further ado, let's take a little bit of a step back into the process first of all. So the production line, the checklist, the higher level idea is broken down to 4 steps. This production line trading. The first step that we want to look at, and we'll do all of this in just a moment, is we want to think about a mechanical scan. Mechanical reason to be looking at something, a chart, an opportunity. When you first start out, it may be you hear a McDonald's advert on the radio, you hear Chipotle, you drive past a store and you think, you know what, I'll just go and look at the stock charts, and you'll develop your interest in the markets in a slow, progressive way. But then at some point you want to systematize, like, how do we find stocks regularly? And the trap that you can fall into, and you after today you won't, but the trap that you can fall into is flicking through chart after chart after chart, looking at every possible stock that you could look at, wondering if the next chart is the one. And what we want to do is we want to be smart about it. Again, as I mentioned earlier, we've got a destination in mind. So we need to know what we're looking for first, so that we can approach it in a mechanical way, because then we're going to look for footprints. So we want a mechanical reason to be looking to take a big list of stocks, the universe of stocks, 28,000 or so in the known US stock market universe. We want to take that down to 3 or 4 in a day or even a week. Then we want to visually confirm, does it look like what I'm expecting? We've got an example, our model example. We're going to use Twitter again. Is this, or if Twitter's our model, does the chart, does this opportunity that I'm looking at, could I overlay it onto Twitter, onto our model example? And would it be a partially completed picture? We don't want the full picture. We want it partially completed by intention, because our profit is when it turns into a fully completed picture. But we want to get it up to the point where, okay, now's the entry, which brings us on to the entry. We're looking for the next opportunity. We have several entry patterns that we can use, but we want to know what we're doing, our entry. We know if it goes the right way, we want to think about where's my profit targets. And then if it's not going the right way, we want to think about trade management. We want to, like, where are we going to exit? So that's what we want to determine here. We want to plan the trade at this point. And then we want to go and do it. The trade management, TTE, it's either going to time out, it's going to target out, or it's going to exit out. And we're going to apply the plan that we worked out here in step 3, and then go and do it in step 4. That's it. That is the overarching production line. So what I'd like you to take away, again, from this session today, is the application of a production line. Everything that you could do can fit into this 4-step process. And it doesn't matter whether you're looking at Dow theory, GAN theory, Elliott wave theory, moving averages, MACD, stochastics, I'm running out of names, CCI, ABC, QRs, whatever the indicate, insert name of indicator, insert name of tool, insert methodology. It could be triangles, it could be wedges, it could be head and shoulders, it could be candlestick patterns, it could be those fancy Murabuzo type names, it could be hammers, dojis, wicks, dragonfly. It doesn't matter. You can put them all into their various categories, because there's, as always, there's a right time and a right place to use the tool. I'm sure we've all heard that story of, if you want to hammer a nail, you go and use a hammer. You're not going to use a screwdriver to hammer a nail. And it's the same in trading. You want to use the right tool for the right job. So then it begs the question, which tool do we use? What's your objective would be my knee-jerk reaction. So I'm looking for swing trades. And this is the good point where we go to the charts. I'm looking for swing trades. I'm looking for trading opportunities that look like this. This is my end result, or this is one of many end results that I'm looking for. So a lot of my students at the moment, and I teach, this is the first strategy that I teach all my students when it comes to swing trading. This is one of the most mechanical methodologies that we can go through. And in a weird twist, for anyone who's known me for any length of time, like 20 plus years length of time, and Rob, you might remember this, I'm not actually doing much different to what I did 20 years ago. It's just that my understanding of it has grown, a depth of understanding has increased essentially to the point where it is legitimately like a production line. We're taking all those discretionary decisions, all those uncertainties, and turning the decision-making process into yes or no. It then becomes like an algorithm, because that's what an algorithm is. It's just a fancy way of saying yes or no statements. Has this thing that we're expecting to happen, has it happened? Yes or no? And if yes, we can move along to the I know, Rob, 20 years, it's hard to think, isn't it? You derailed me with a comment there. I derailed myself, I think. But, we're looking for that production line experience, a series of yes or no questions. And that's what it should be. Has it happened? And selfishly, as I said earlier, I want it for me first. Like, it's not a fancy teaching point. I don't want to have this great marketing gimmick. It turns out that it's very useful. People want to know this. So there's just one reason why I got into the teaching side of it. People kept asking me, how do you do it? How do you do it? How do you do it? I'm showing you how you do it right now. We're going to go through it. But it's for me first. I want it for me. And I'm giving it to you right now. So there's everything comes in fours with me. I don't know what it is, but there's 4 steps to our first process. So I'm going to go through what we're looking for. Our end result, this is Twitter. We're going to be looking for average prices to cross over. We want to see that's number 1. Number 2 is we want the average price to be crossed over for about 40 trading days. We also want to see that prices moving, because just because the average price is crossed and they've been crossed for a length of time, it doesn't necessarily mean that price is trending. So we want to actually see, is price moving? So we want to see price, the stock has moved upwards 20%, 25% in the last 60 days. And then the 4th and final step, and the yellow boxes, this is where we want to be interested. Number 4, we're down 10%, minimum of 10% in 10 days. And as you can see here, there's 16, there's 26, there's 19. We were down 20, a little bit over 22. I've not reworked it out. It did go a little bit lower. But we're looking for, it's got to be down at least 10%. The other thing that we can do, so we can do this in 2 ways. So A is down 10% in 10 days, and then B is it's below the 20 or below the 50. So we can scan for the retracement part in 2 possible ways. It's usually either one or the other, but most of the time it's both. So we've got 4 stages here. This is the footprint. This is, again, this is Twitter, but this is the end result. This is the destination. This is X marks the spot. And what I'm interested in, excuse me, what I'm interested in is X marks the spot, the yellow box. That's when I want to be interested. And now that we know, a little bit of a croak in my throat, just bear with me a second, folks. I just want to take a quick drink of water. Just bear with me. Oh. It's not the Rona, it's just a sore throat. I've had the Rona and recovered, thank you. Earlier this year, so I'm a survivor and all that jazz. We want to be interested in X marks the spot. So X marks the spot is our destination. I'm not interested in the stock until it's done those 3 things. Crossing the average price, in the trend for about 40 days, and it's moving up. And then step number 4 is the retracements. I want to be interested in the stock when it's dipping in an uptrend, retracing in an uptrend, correcting in an uptrend. There's lots of different descriptors to describe this. BTFD, hashtag BTFD. And I think sometimes this is also where some of the confusion lays, because there is a lot of jargon, there's a lot of terminology. A lot of it's made up. I've made up my own jargon. I've made up my own terminology. It's just the nature of the industry. There's no set standard in most cases. Some people call these fractal points, turning points, pivot points. It doesn't matter. Understands that we want to identify a stock that is trending so that we can buy it when it's retracing, when it's dipping. If we're thinking about investing, we would be buying at a discount. So that's when we want to be interested. So the step numbers 1, 2, and 3, they're going to help us find, filter, and sort. But again, I appreciate that we're looking at the end results. we want to do all of this in our watch list on the left. So this little universe of stocks, it's about 150 stocks. I've pre-filtered them. They're active, they've got options. There's about 1 million shares on average traded, and they're between $10 and $30 in this little low dollar stock portfolio that I'm currently building. Conversation for a different day, but nonetheless, if you want access to it, send me an email and I'll be happy to send you a list of the stocks that I trade and the ones that we've looked at today. So what you'll see is we've got these blue boxes here, and we've got some information. Some of these tools that I've custom built, they're only custom from the point of view of I've had them prettied up so that I'm quite a visual person, so I'd rather see colors than numbers. You can get them as standard with numbers, but it won't work in the way that I'm going to show you in just a moment. But what I want to do is I want to do all my filtering and scanning, just like it's in a spreadsheet over here in the watch list on the left. And what it means is, let me just scroll down. What it means is I can start to do the filtering of the things that we've just looked at. So step number one, we know what we're looking for, but guess what? I can scan for it. Have the average prices crossed over? So this column here, this is telling me that I've got average prices, either bullish or bearish. And in this little universe, most of them are bullish. I'm just going to put a break in here. So now I know that all of these stocks are in a bullish state. The average prices have crossed up. So then step number two is, do we have that bullish state for more than 40 days? So this next column I'm just highlighting, is it in a bullish state? So I can sort the stocks by the time in trade. Now in this case, there's only 3 or 4 that are below 40 days, but you know what, just for the purpose of this, let's just chop them off anyway. So I'm going to exclude the stocks that are less than 40 days. Again, just like a spreadsheet, just put a little break in and it's going to keep them at the bottom of the list. So the next thing, number 3, is, has the stock moved up about 20% in the last 60 days? So it's going to look back and basically say, has the stock moved up? So this column here, this is a built-in tool. It's not custom, but it comes as standard in most good charting platforms. I've got it set to look back over the last 60 days, and it's telling me, is the stock moving? Is it going up? Is it going down? So now they're all ranked from high to low, and I'm looking for about 20% in the last 60 days. And I'm just going to put a little bit of an obvious break there. So I'm just excluding, I'm chipping away. Like, what was it? One of those fancy artists was chipping away at the block of stone. Was it Michelangelo? Is the phrase? The statue was always there. I'm just chipping away at the bits that we don't need. That's all we're doing here. We're just chipping away at the bits we don't need. So steps 1, 2, and 3, I'm not looking at, maybe half my list. It's not, no, I'm not interested. It's just, I'm not interested right now. So that means that there's only a certain number of stocks. In fact, out of those 150 or so stocks, there's only that many that are meeting those first 3 criteria. Let me pause there. Does that make sense? Is everyone happy with that logic? Now you can replicate this in lots of charting providers. You can go and do this on FinViz if you want. I've covered that in prior workshops, prior presentations. Oh, cheers, Ezekiel. I see you've popped in. You're a little bit late. There'll be a tardy note on your account later, Ezekiel. Does that make sense? Just pop a comment in the chat box. I mean, this all we've done is step number 1. If we go back to our production line again, I explained what we're looking for first, the destination, but all we've done so far is mechanical scan. That's all we've done. The mechanical scan. I know the destination. I'm looking for X marks the spot. I'm looking for the destination, the label on the jar, any metaphor you want. But what we've then done is scanned for it. And you saw me do it just like in a spreadsheet. I like to rank and sort my stocks. Now, different tools, different softwares will do it a little bit differently. Like this is the way I do it. And it gives me a list of stocks, that many stocks. Now, as I said earlier, what I'm interested in is step number 4. This is where we're going to transition from mechanical scan to visual inspection, the second step of our overarching production line. Now, again, let me just pause here, because I promised you, like, the tools don't matter. Like, this is what I'm looking for. This is my blueprint, my footprints. But equally, you could be scanning for a Dow theory, GAN theory, Elliott wave theory, some combination. You could be looking for a point and figure pattern. You could be looking for some type of price pattern. It could be triangles, could be wedges, could be head and shoulders. There's lots of softwares that have got lots of scans that are built in. They're done for you. They're an algorithm. And whatever tool that you want to use, whatever you're drawn to, however you want to trade, you know, that's where the scan part is. That how do I take a big list of stocks down to a small list? That's all we're doing at this point. And this should mean, when you're crystal clear, absolute clarity, what am I looking for? Okay, I'm looking for wave 3 Elliott wave. Great. You can go and scan for that. Now I'm looking for a trend so that I can buy the dip in a trend. So I'm looking for, at the very least, an early stage trend as defined by the moving averages, time in trade, depth of movement. And then step number 4 is I'm going to look for a retracement. And I can scan for price, as we said. Number 4 is it's below the 20 or below the 50, or we've got 10% down in the last 10 days. And I can do all of those things. It's still in the watch list. I can sort this column I've got set to look back over the last 10 days. So I can rank and sort the stocks. Has it retraced 10% in 10 days? Great. There's only one stock that I really need to look at right now. I don't know if you can read that on my monitor, but it's 9.1%. Okay, it's not quite 10%, but it's 9% in the last 10 days. And then the other 2 columns here, we've got red, red, blue. It's saying the left column that I'm highlighting is below the 20. The middle one that I'm highlighting is below the below the 50. The right one is where's price in relation to the 200. And we've already looked at this one, you know, is the average prices, have they crossed over? So all of these stocks that are above the 200s, some of them are above the 50 or below the 50. And then there's a small number that are below the 20. So again, I've got a very small number of stocks that meet that criteria. And as I keep saying, every time I go through this, it takes longer to explain than to actually do. So the reality is there's only one stock here that meets our requirements, and it's in the yellow box. It's at least 10% down in the last 10 days, and or it's below the 20-period moving average, and or it's below the 50-period moving average. It's below the 10 and I apologize for my coughing and croaking. You obviously don't need to hear that in your earbuds, but unfortunately I can't prevent it. Take another drink of water. We've got Oxy down 10%, 9% in 10 days. It's below the 20, below the 50. It's above the 200. It's been in a trend for 69 days. Okay, so it's more than 40. So 69 days, everyone's favorite number. So 40 days is that blue box. So about 60 days is going to be about here. So the reality is, it's probably, if we were to overlay, again, keep in mind, this is still Twitter. This is still Twitter. Keep in mind, we've scanned for the stock, but it's probably closer to being in the second box than the first box. Would you agree with that? Pop a comment in the chat box. Would you agree that we're probably closer to the second box than anywhere else? Just based on the numbers. We're up, we're trending, and mainly because we've been in that trending state for about, well, almost 70 days. 69 days, there we go. So if we go and look at this chart, if we go and look at it now, we're expecting to see, let me scroll back, we're expecting to see something that looks like that. Does everyone get that point? I'm showing you with the benefit of hindsight what our model looks like with Twitter, but I'm not interested in Twitter after the fact. I'm looking for a stock that looks like Twitter before or as it's in one of those yellow boxes. So it's looking like it should look like this. And if it does, the next step, step 2, visual confirmation, is what I'm looking for. Does it look like the label? Does it look like Twitter? And we figured out over here on the left, without ever looking at all those other charts, none of those make any sense. Not interested in the other 150 stocks. There's only one stock today, and it doesn't mean I'm going to trade it today, but there's only one stock today that I need to look at. I'm expecting to see it look like this. Let's go and do it. Click on Oxy, OXY. So what do you think? Let's throw it open. Now we are looking at this chart. Does it look like Twitter? It's going up 22% in the last 90 days. It's up 22%, and then it's down 9% in the last 10 days. It looks like it's actually down more than 10% in more than 10 days, but it's just a measure. But we've got a nice retracement in an uptrend. Would everyone agree that that looks like buy the dip? Buy the dip. This is what it looks like. This is how we scan for it. I agree. Oh, everyone's in agreement. Perfect. Cheers, Kevin, Jason, Rodrigo. Perfect. Does everyone get it? We don't have to complicate matters by looking at chart after chart after chart after chart after chart. And then 3 hours later, your loved one is shouting, come and set the table. Why have you done the hoovering? Why have you done the washing? You're supposed to be looking after the kids. Whatever your role is in your household, you're not wasting time frivolously. I can zero in, like that's the only stock on this little universe of stocks of 150 or so. That's the only one. I still don't need to place the trade today. So the third part of our process is I can look for an entry. I can look for a target. I can look for a stop loss. It's a little bit beyond our session today. And then the step number 4 is to, go and deploy the strategy and basically apply the target, the stop loss, the exit, whichever one happens. Only one of those 3 things is going to happen. But we need to manage the trade. And we've got rules and, again, another systematic approach to manage the trade and identify the entry, the exits, if it's profitable, the exit, if it's a stop loss. We've got time factors. We've got lots of little checklists that we do in flights, in the trade. Just like a pilot, you've got your pre-flight checklist. That's what we've just done. You've got your in-flight checklist. And then the management is we want to land this plane safely. We want to make sure that it's not going to break the bank if it's going to lose money. And we want to make sure that we take profits when we say we take profits. We've got that in-flight management. So this is the only one we need to look at. And as always with these things, it takes longer to explain than to do. So let's go and do it again. Again, I've got another list of stocks here. Again, I've not filtered them since last week sometime. I'm just going through it. It's another segment of my overall universe of stocks. And you can see here, I've got this time between the $30 and $50 range. I've got about 150 stocks. So I can, let's do it again. Let's sort by, let's go back to Twitter. This is our model. Again, it doesn't matter what size a stock is. The same process is the same. So I want to sort the stocks relative to their average price. Are we in a bullish state? So let's just focus on the bullish trades. Yes, we've got that. Time in trade is going to be at least 40 days. There's only so many that aren't. So let's just chop those off. So again, another break there. I want to see that we're up about 25% in the last 60 or so days. So we can chop a big chunk of these off. Again, it's not that these aren't worth trading if they're only 10 or 15%. We're looking for good movements. So let's just be clinical about this. Let's put another break in there. So now all these stocks are the ones that are average prices crossed up in a trend for at least 40 days. They've been going up for the last 60 days by at least 20%. That's what these stocks are. Now we want to sort them by, are they retracing? Are they in the yellow box? So they're down X%. Let's go to the top of the list. Are they down 10% in the last 10 days? You know what? There's none. There's maybe one, 8.3%. That's not 10% in 10 days. So out of this list of stocks, I don't need to do anything. And if these were all the stocks that I was looking at, my job today is done. You saw how long it takes. click sorts. I'm looking for certain things. I don't need to look at every chart every day, all of the time. The mechanical scan, what do I need to look at, if anything? What do I need to look at, if anything, today? Okay, so on that second list of stocks, there's nothing for me to do today. So if that's all I'm looking at, well, guess what I'm going to do? I don't need to look at the chart. I don't need to go hunting for trades. There's nothing for me to look at today. Nothing. I'll rephrase. There's nothing new for me to evaluate today. So come back tomorrow. Does that make sense? That last part I kind of ran past. If you don't need to take any action today, come back tomorrow. So it's time efficient. I know my destination. I know what I'm looking for. I know why I'm looking for it. I know what I'm going to do next when I find it. And if I don't find it, if it's not in the yellow box, X does not mark the spots, then come back tomorrow, because tomorrow there might be one, but I don't need to do anything today. And I think this is one of the more difficult concepts for newer, well, to be fair, not just new traders, but new and old traders. You could be an experienced trader, and it's an easy trap to fall into, to say, you know what, now I've got these 50 stocks here, or 46 stocks. There's 46 stocks that meet criteria 1, 2, and 3, but none of these stocks meet the fourth criteria. Are they retracing? Is it in the yellow box? No, none of those stocks are. Come back tomorrow, or go and look at another list of stocks. But this little pocket of stocks that we've got here, there's very little for me to do today. Does it mean that there's nothing for me to do tomorrow, or nothing for me to do at all? Probably not, because if you're doing this on a regular basis, you're going to have positions. There's going to be some management. You're going to apply step 3 and 4 of the process. You're going to be managing trades and placing new trades, maybe closing some. It's not time efficient. My apologies. It's time efficient. You're going to be spending a lot of time doing it, because when you've got clarity on a system, that business that we were talking about earlier, you know what you're going to do, when you're going to do it, and why you're doing it. And it should be like that. And as I said earlier, selfishly, I want it for me first. It's not a fancy gimmick. It's not a tool or a widget or that makes a great sales pitch. It's nothing to do with that. For those of you who don't know, I've got Crohn's disease. I get tired real easily. Earlier in the year, I had that pesky bug thing that's gone around. You may have heard the name of it. I was quite seriously ill earlier in the year. But did I need to worry about what I'm doing, when I'm doing it, why I'm doing it? I didn't really need to engage the brain. I didn't need to think about it. It was quite literally the trade set up, the trade went on. And that's what I want for me first. When I first was diagnosed with Crohn's disease, again, I was housebound for 3 years. Like, I'm very well aware of what it's like to not be able to go anywhere. And if I'm the only one that's doing it, like, I know what it's like. But if I've got a 20 or a 30-minute window to be able to trade, then I want to know that I can be efficient and make the most of the time that I do have available. Now, that was my situation. It was health related. It was illness related. But at the same time, like, take that out. Like, what's your situation? What's your time efficiency reason? You know, if you could zero in on the best opportunities every day and every week that made sense for you, your life, your lifestyle, your objectives, you can speed things up and slow things down. Me personally, I'm looking for one good trade a day. Ideally, that's what I'm looking for. Just one good trade every day. Maybe I'll find 2 or 3, but I should be able to find one thing that's worth my time and worth trading. And if you want to turn the dial on that production line that we spoke about, if you want to slow things down, you can turn the dial to the point where, you know, actually, Phil, I'd rather just look for one thing a week. If you want to turn the dial the other way, you should be able to speed things up. You can look at more stocks, more opportunities. You can look at a larger universe of stocks, and you can speed things up. So if you want to find 3 or 4 trades every day, if you want to have a big portfolio, if you want to, like, kind of manage your finances like the hedge funds do, and the banks and the institutions, and have a portfolio of portfolios, which is ultimately what I try and teach people, where I'd like to get people to, then you can turn that dial and speed things up. You can go at a pace that makes the most sense for you. But it all starts with having a system, having a process, having what I like to call a production line. So does that make sense? Everyone happy with the logic behind this? It's reasonably straightforward, but no matter what tool or indicator that you use, you can and you should be able to fill it into the mechanical scan, the mechanical process. What's my reason for taking a big list of stocks down to a small list of stocks? One of the things that I do here is I don't need to look at every stock every day. I'm not interested in penny stocks. I'm not interested in stocks that don't have stock options, because I know I'm going to place a trade with a stock option. That's what I prefer to do. It's not essential, but it's capital efficient as far as I'm concerned. So I can take all of those stocks out of the known universe. I apply a few other filters. It leaves me with a universe, my possible total fishing universe is about 750 stocks. That is my world when it comes to trading opportunities. So I'm only fishing for opportunities out of a pre-filtered universe. So what you saw me do is I've segmented them out again by they're in a certain category or size of stock. So I can build a low dollar stock, and you can segment them any other way you want. If you want to segment them by a sector, you can do. If you want to segment them by market capitalization, you can do it any way you want. I've just done it by dollar amounts, just for simplicity. In some ways, I'm a little bit of a lazy trader, but when you're a lazy person, you find the most efficient way of doing something. Listen to lazy people. They're really good at stuff. So we want to take those big list of stocks down to a small list of stocks. And again, you've seen that it's a mechanical process. What's my reason to be doing something? It could be Dow theory, it could be Gann theory, it could be Elliott wave theory, but mechanize the process. If you find yourself doing something, a repetitive thing, it can probably be systematized. And it's true in life as well as trading. If you find yourself having to buy the same thing every week, well, put us on subscription and just have it delivered. Amazon will literally drop off toilet roll. You can get a subscription to toilet paper, of all things. I know, I didn't make it up. It's not my thing. It was just my recent discovery. Really, Amazon? I can get toilet paper on subscription? But, the point is I don't know if you go there, but it's too late. But you've got certain things that you do. We're all creatures of habit. We're all humans. We all have certain consumption. And if you're using things at a certain rate, like I buy protein once a month, help supplement a diet. And I know how much I take in. I know how much I'm using. So I have protein on subscription. I just know it's going to appear at the beginning of the month, because I know at the beginning of the month, I'm probably going to have run out. The same with trading. When you find yourself doing the repetitive things over and over again, sit back and think about it. Like, okay, I'm doing the same thing manually, visually. Could I scan for that instead? And then I just get that 10 stocks that make sense today? Give it some thought. I would imagine whatever you're doing to find your current trading opportunities, you can mechanize a large part of the process. And I've got to admit, for me, this, and I'm emphasizing this elements more than anything, is this is the time saver. This means that you're not going to be flicking through chart after chart after chart. It means that I can do sessions like this and not worry that I'm missing trades. I've done the scan. I found my trade for the day. I found my 2 or 3 trades for the week. I'm done. And it allows me the time to enjoy these sessions and have conversations with great people like you that are here every day and help point you off in the right direction. Some of you I'm going to hop on a call later with maybe, but I'll tell you what I'm going to do next. When I finish talking, I'm going to go for a walk. I'm going to turn it all off. The markets don't matter right this second. I'm going to go for a walk. I'm going to spend maybe an hour, hour and a half, going to go for a walk, going to grab a coffee. The sun's shining here in the UK. It's a nice warm day. I'm going to go and enjoy it, because that's what having a systematic approach allows me. Like, what could it allow you? Like, what would you do with your time? What would you do with your freedom? What would you do with all the extra time that you're not wasting by trying to figure out, should I trade this stock? Is this the right one? If you find yourself asking those questions, you've not got a system, you've not got a process. You're just kind of flipping the coin and hoping that you find the right opportunity. It's a lottery ticket approach. Maybe you get lucky. And you've seen lots of people a few months ago get lucky with stocks like GameStop and all those meme stocks. You can get lucky. And a lot of people got very rich very quick getting lucky. But what I'm more interested in is doing it again tomorrow. I've been doing this 27 years now. And it's this approach that has allowed me to still be doing it all those decades later. A systematic approach to find, filter, and source opportunities. That's what we're doing. So if you want a little help with this, and you want to learn this production line trading process in the smartest possible way, you want to focus on the best times to trade, the best opportunities every single day. You want the best stocks in the known universe. As you saw, it's one simple process that we use. There's 9 variations that I use to find different stocks. We looked at just essentially swing trading moving averages. We can be looking for explosive momentum stocks. We can be looking for breakout stocks. We can be looking for range stocks. There's 9 different patterns that we can use. We also have a TTE management, trade management. The real secret to success is keeping the money that you make, the management side. What do we do when we're in the trade? Where do we take profits? Where do we take targets? What are we going to do? How are we going to manage that trade? You're never going to stress over if the markets go up or down. You should be able to profit from both up and down movements in the market. So you should be agnostic on direction, which is what I like. You're never going to spend hours flicking through chart after chart. You're never going to be reading through boring company reports. I will add a caveat, unless you want to. I don't. I made the decision years ago to be not reading company reports. I just want to get the maximum result with the minimum possible time. But once you've mastered it, you should be able to start seeing results. In fact, you should start to see results after today's session. You don't even have to work with me. You should be able to find opportunities after the session. But you'll be able to have trade confidence so that you can transition to the best possible trader that you can be. And if you want some extra assistance with it, let's talk. I truly don't know if what I do is right for you, but the next step that you can take is to, you can go to theperfectdaytrade.com, theperfectswingtrade.com, or if you'd like to send me an email, I thought my email was here, but it wasn't. You can go to phil@antivestor.com. And the AntiVestor is up there. So you can go to phil@antivestor.com if you want to send me an email direct and let's have a conversation. Let's just start the dialogue. Again, as I keep saying, I don't know if what we do is right until we have a conversation. At the very least, I'll always point you off in the right direction. But if you want some assistance, you want some extra help, then let's talk. So folks, that was production line trading. My take on it, my spin on it, the overarching 4 steps can be applied to any system, any methodology, any logic. Maybe you can layer it onto what you're doing right now and help you identify, you know what, I've got some bits that are missing. Maybe you've only got one piece of your production line, and what it should be able to do is to help you identify those missing pieces, those missing gaps, the missing part of your production line. And that's what we focused on today. I've gone through again the example and the illustration of the Twitter footprints, the Twitter example. And again, we went through one simple example of a trend trading opportunity. It's kind of trend trading, momentum trading is what we're looking for. But all we're trying to do is find opportunities that allow me to profit from swing trading at the end of the month. It's a rolling month. It's not a calendar month. So, don't write in if it's not quite at the end of the month. Average time in trades are about 20 to 30 trades with this 20 to 30 days with this process. Visually, you'll be able to see it. Now you know the blueprint. You can quite literally look back over the chart and say, how long did it take last time? Okay, great. It's probably going to take this long this time. So when you spot the footprints, you'll be able to find it, or you should be able to find it on a regular, daily, consistent basis. That's me done. A little bit early today, a little bit early. As I mentioned, I'm going to head out the door as I finish recording. I see a few questions that need a private answer, private response. So I'll stick around for a few minutes longer. But once again, thank you for your time. Thank you for your attention. If you've got any questions or comments, pop them in the comment box below or wherever it is on your device. I will be around, and if you've got questions, I'll be happy to stay around and answer those few that come through that need a direct response. If you want to send me a message over on my preferred place, which is Slack, you can go to my website, antivestor.com/Slack. You'll be asked to register because it is a separate third-party tool, and it just allows you to send me a direct message, which is what Jason should on. Jason, I'll get to your question in a moment to see you here as well. But yeah, you can ask me anything. You can send me a direct message. It's just the quickest way to communicate with me. If you've got a question that's burning a hole in your pockets over the weekend, just send me a message. With that said, thank you again for taking a moment out of your day, out of your week. I fully appreciate that we could all be doing other things with our time, and it's not unnoticed that you've decided to spend some of it with me again this week. If you'd like to talk about trading, by all means, send me a message. As I mentioned, phil@antivestor.com is my email. And if I don't speak to you in the chat box or over the weekend, have a wonderful weekend. Make sure that there's maybe ice cream involved with whatever you're doing. Until next time, I'll see you at the same time, same place next Friday. Bye for now.